what Mohammed ElArian is now saying about the housing market. We can talk about Zillow and a lot of other things, folks. Let's get into it. It is Tuesday, August 29th, and this is your daily financial news. Here we go, folks. Let's first talk about what Goldman Sachs had to say about the housing market. First and foremost, Goldman Sachs is talking about existing home sales, aka transactions. Unfortunately, Goldman Sachs is now saying they do not see existing home sales, aka transactions, getting back to the 2019 peak until 2027. Folks, if you took advantage of my free 53-year spreadsheet and you looked at 1978 total transactions, I think you would be shocked at how long it took to get back to 1978 peak. If you don't know what I'm talking about, go to my website, onerentalatatime.com. There are 8 boxes, the lower right. Click on that, put your email, get the spreadsheet, get all the sources, and look for yourself. What happened in 1978? Rates started going up. Housing transactions ultimately crashed 50% and don't come back until 12 years later. Folks, Goldman Sachs might be early. We are not going back to 6.4 or 6.2 million transactions. In fact, for the month of August and the month of September, I'm already calling sub 4 million for existing home sales. So again, yeah, not good. On top of that, Goldman Sachs is talking about that 43% of folks, 43% of folks are reading mostly negative economic headlines. Folks, I brought this shirt out. It says, don't be a doomer, right? Don't stand under the clouds. Don't be a doomer, right? You're going to be alive in 5 years. Act like it. Understand that cycles happen. Bear markets, recessions, they're a year, they're 2. Boom cycles are 8 to 10. Yes, we're going through a tough time. No question. Stop being a doomer. 43%, almost 1 in 2 people are focused on economic doom to their detriment, to their destruction. Now, if you watch One Rental at a Time, I am 99% sure you're not a doomer. If you watch One Rental at a Time more than once, I feel pretty good about saying you are not a doomer. But you know doomers. They're around you. You see them. Doomers wouldn't know a good or great deal if it sat in front of them. Folks, this is like my 3rd economic cycle as an adult. They happen. I hope you lived through 5 of them, which means you lived a full life. Understand that these are the opportunities to make moves. So don't be a doomer. If you're a doomer, you're not going to go anywhere. You're not going to make it. You're going to be in the exact same spot you are 5 years from now. And wouldn't that be a shame? So 43% of folks watch economic doom. 11. 1 in 10. Why is One Rental at a Time channel so small? Because 1 in 10 people want to know how to take advantage of the situation. 9 out of 10 people will grow all of those channels of renters and failed mortgage brokers and whatever. We understand that, yes, recessions happen, the business cycle is unfair, but there are ways to take advantage of that. So again, I found that very interesting. 43% of folks are focused on economic doom, and only 11% of folks are focused on how to make an opportunity. So there you go. How about the one and only Mohammed ElArian? I have said it many times. I think he has a tremendous grasp on the U.S. economy. He is an economist worth watching and worth following. I think he might be, let me think about this. He is certainly in the top 3 economists that I follow. I just think he is articulate. He understands the bigger picture. He doesn't overreact to one piece of data. What did Mohammed ElArian say on CNBC yesterday that then was quoted on Twitter? He simply said, I want to make sure I get his quote right. Where is it? Oh, page 2. The housing market is broken. In fairness, he said, the housing market may be broken. Mohammed, it is broken. Just between you and me, the housing market is broken. Also, Mohammed is talking about, you know what happened when interest rates went up so fast? It not only hurt demand, but it has also hurt supply. And this is what everyone doesn't get who still thinks we're going to have a price crash. We have fundamentally changed the supply-demand curve. Demand has gone down and supply has gone down, which takes the equilibrium price point to the left. Hey buddy, janitor on fire. Yep, see you in Vegas. I can't wait. I'm visiting a couple of locations next Friday. I hope to have an announcement that weekend. Crossing my fingers. Hopefully have a date and a location locked down in, what is today? Tuesday? About 10 days, maybe 11 days. Fingers crossed. Hope so. Thank you for the super chat. So again, Mohammed ElArian is now saying the housing market is broken, supply and demand, price is stable. Goldman Sachs is saying transactions will be down till 2027. Folks, this is the market you and I have been talking about for a year. Nothing Goldman Sachs said, nothing Mohammed said are a surprise to us. They are late to the game. You and I know what to do today. What we are doing today is we are looking for listings that has days on market over 30. We are trying to find motivated sellers. We are writing disrespectful offers, and we are getting good or great deals at 8% cost of capital. We do not care about the cost of capital. We care about a great deal. It is that simple. My course, How to Get Started One Rental at a Time, or better yet, the boot camp that still has a couple of spots in it, is how we change the game. How we use the bad environment to our advantage, right? This doomer is standing under one rain cloud while the rest of the environment is beautiful. Think about that. Yes, it's bad. Yes, but there's opportunity. There's opportunity everywhere. So again, Mohammed, how about the rich? The rich. So what was rich? This was a Capgemini survey. Capgemini did a survey of folks who have $1 million in cash, or they called it investable assets. Investable assets. So not equity, not your home equity. Investable assets. They did a survey. And I personally think it was shocking what happened in this survey. 34%, call it $1 in $3, is sitting in cash today. Why is that? Well, for the first time in the last, 30 years, 35 years, cash earns 5%. A lot of the rich have been investing in things that had cap rates of 5 or 6%. Why take that risk? Why be involved in assets that are resetting in value all the time? So it makes perfect sense to me that they are sitting in a high proportion of cash. You have $1 million in the bank, right? You're making 50 grand. Not great, but certainly worse than, better than, last year or the year before. On top of that, the rich, again, remember rich defined in this case as $1 million in investable assets. Only 23% of it is in the stock market. The stock market today, when you look at kind of dividend calculations, is about 4%, I think, when you add in appreciation and all of that. So again, in cash, you're earning 5%. Makes perfect logical sense. So 23% in stocks is at a 21-year low. What do the rich know that we don't? I would argue, I would postulate, I would guess the rich are today in preservation mode. Capital preservation. They are not today thinking about how to grow their money. They are thinking about how to keep their money, right? The environment is different. And again, cash makes 5%. I found that pretty interesting. Not only that, but we got Warren Buffett. I don't know if you saw Warren Buffett's earnings announcement, or more importantly, his Q2 summary. Warren Buffett raised cash at Berkshire Hathaway. He sold about $8 billion in stock to raise cash, and of course he took cash and didn't deploy it. I think it was $14 billion in cash. Q2 cash balance for Q1, he has an additional $14 billion. Warren Buffett is a patient investor. Frankly, Warren Buffett's earning 5% on his money. Leave it there. It's hard. Why make it any harder, right? Earn 5% while you wait for a big opportunity. Dave Ramsey went on a rant yesterday, and I fully support him. Dave Ramsey was talking about adjustable rate mortgages and the fact that more and more people are doing this, buy an ARM and gamble. I think it is a horrible strategy. I think it is risky. I've lived in an environment where I had debt reset at the wrong time. It was scary, painful, nerve-wracking. It worked out, but I still remember it may not have. ARMs, as Dave Ramsey says, I want to make sure I get his quote correct. ARMs are a ticket to foreclosure. I love how he simplifies and makes it very visual. If you get an ARM, you have a ticket to foreclosure. Not that you'll necessarily cash in, but again, with that ticket, it may come due. So again, be careful. Run your numbers at fixed rate 30-year debt. If you have 30-year fixed rate debt, the options are to get better, not worse. Why is the U.S. real estate market frustratingly flat? Because, 98% of folks either have no debt or fixed rate debt. Why is Canada, the UK, New Zealand, and many other markets in real trouble? Because they have ARMs. Again, if you have an ARM and you have a plan and this, that, the other, fine. For most people, ARMs, as Dave Ramsey correctly says, is a ticket to foreclosure. Be careful. Kevin OLeary. Man, Kevin OLeary is really bringing the heat. Again, I look at Kevin OLeary as to me, he's kind of obviously he's a very bombastic, person on TV, but I do think he has a interesting handle on small mom and pop businesses. Right? When you look at the portfolio of stuff he's acquired via Shark Tank and all of those other things, he really does have a good coverage of small business. And what Kevin OLeary is saying about the environment with rapid rate increases is, I live in the real world. A crisis is emerging because the rates went up so fast. Small business and the cost of capital is constricting. I've said it for probably 6 or 9 months now. The big, right, the S&P 500, for example, who can raise debt today, they're going to get bigger and stronger. It's the little and mid-size that are in trouble. And if you bring it back to real estate and home builders, I had a conversation with Lance Lambert 6 or 9 months ago that I was fearful that the small builders will be extinct. They don't have the balance sheet now that the commercial banking system is on hold, not lending. We're going to see the big get bigger, and unfortunately a lot of the small get hurt, crushed, or go bye-bye. And then finally, folks, I want to thank you. It is official as of yesterday at 5 o'clock or so. My new channel, The Daily Financial News, which takes this live feed, adds in all kinds of animation. Thank you to my team. Just exceeded 4,000 hours and 1,000 subscribers. So we are eligible for monetization. We are eligible for monetization, I think, in 32 days. In 32 days, you helped me take the Daily Financial News and get it to monetization. I want to thank you. We are now in the queue. It takes a couple of weeks to go through and make sure the content is up to YouTube standard. I feel great that it will be, but I want to thank you for being a part of this journey and helping me monetize the second channel. And then lastly, folks, remember, we are doing this 10-week boot camp. We only have 5 or 6 seats left. We are going to go through the whole journey of picking a market, a buy box, networking. We're going to do roughly 2-hour sessions spread out over 4 to 6 months. We're going to take one topic a day or one topic a meeting, and then I'm going to open it up to Q&A where you can ask me any question. My goal of the 10-week journey is we go on this journey together, but everybody is at a different place. I understand that. You're going to be able to ask me your burning questions on any topic after we do our day. So again, if you want to be a part of this, if you feel stuck, if you're not making movement, feel free to buy it. It is $1,000. Again, if you're going to put it on a credit card and pay interest, do not buy it. I put out lots of free content on YouTube. There are 11,000 videos you can go through for free. Go do it. If $1,000 is too much, you might want to get the buy box at $47, the deep dive. Or I still think for most people who follow a plan, my $3.99 course is a great way to get started. $3.99, how to get started one rental at a time. Go through these 5 steps, build a buy box, track it, all of it. I'm doing the 10-week journey one time because I want to record it and create content to help people for years to come. Folks, have a great day. You're amazing. Remember, don't be a doomer. Doomers don't make any money. Doomers are broke. Doomers, unless you're a doomer making content on YouTube, then you're doing okay. There are doomers on YouTube making 80 grand preaching doom. Crazy. Interesting world we're in. Thank you, folks. Take care. Bye, bye, bye.